Welcome. This is Power Trading Radio Live, fueled by Online Trading Academy. For more information, visit powertradingradio.com. Now, here's your host, Merlin Rothbell.
Hello, everybody. Welcome to Power Trading Radio. Merlin Rothbell with you for your Hump Day. It's Wednesday afternoon edition. The company's softball game out there today. For those who know, the Click Hitters going for our first win of the season this evening. Hopefully, I won't end up in a cast on tomorrow's show. Hope you had a great trading session out there. Of course, if you're holding Tesla long, it probably was a great session out there because that pretty much pulled up the NASDAQ and a lot of the other market indexes. Again, throwing caution to the wind, but that's okay because the trend right now is definitely to the upside. All-time highs again for a lot of these indexes, and I'll show you those charts here in just a second. Our guest for the show today, options related, will be Steve Moses joining us here. I'm not sure where in the world he is today. We'll find out shortly. If you have an options question, feel free to send those on in at powertradingradio.com. Click the little button there that says Power Blast, or go to our YouTube channels. We've got Gayer and Vernon on the Online Trading Academy channel saying hello. Hello, gentlemen, and others that are hiding in the shadows. We also have Jorge on the Power Trading Radio YouTube channel. So hopefully you guys send in some questions along the way for Steve or myself, and we'll get to all those as we progress through today's show. All right. TJ's going to start me off with our worst performer. We like starting at the bottom and working our way up to the top. It wasn't that bad until a couple of hours ago. Bitcoin. It was by far your worst performer. I'm going to actually refresh this because it's so volatile right now. Who knows where it's at. Down 5.37%. But you notice it all happened so quick. If you go back to 1 o'clock, it was trading at 10,166. And by 1:50, so less than an hour later, it had dropped $600. Right now, it's down to about $548 on the session, at least in the last 24 hours, making it by far your worst performer. So there we go. That's your worst performer, and again, down 5.37% for Bitcoin. From there, everything else is positive. That's right. We're going to go to the S&P 500, show you that ES that we talked about at the very top, saying everything's hitting all-time highs. Yes, you had an all-time intraday high and an all-time closing high. You had just all-time highs out there. Euphoria abound. Let's throw caution to the wind and just buy everything. That's what the market is telling us to do, and apparently that's what's happening. You see that S&P, nice big green candle on today's session. A little bit off the highs near the end, but all in all, a good day for the S&P, up 0.47%. 3,386 is where we finished for that one. And it actually was negative at one point, which was kind of nice. Gotta love that. Resilience is the key word for the month of February. All right, that was number 6 with the S&P 500. Russell 2000 brings in our 5th place finish, up 0.54. Still not at all-time highs, but creeping ever so close to it. You can see we've got a little bit of ways to go until we get to those highs from back on the, give me the date, TJ, the 17th of January, which would put us right around the 1716, 1715. I guess the high that we've seen for the year was 1715.1. So there we go. There's your opportunity of a potential supply zone. Of course, we'll look at some bigger time frames when we get closer. But today, Russell 2000 up 0.54%, 1,692, and that's where we are at right now. All right, number 4. Going to gold, you would think the gold might be struggling a little bit given how strong this dollar has been. Boy, it's just rocking and rocking and rocking. GC is what we want to look at. Gold on the day up 0.69%, closing at 1,614, which is where it's at right now. From a technical perspective, we talked about some viewers feeling that this might actually be like an ascending triangle. I didn't feel it was. Right now, you're looking at a formation, though, which may give us a nice breakout trade for those of you who are breakout traders, depending all on your strategy. We came right up into that high that we achieved on the 8th of January. We did break it, but did not close above it. Keep an eye on that one from a long-term perspective. If you get a close above that line, that might be a nice opportunity from a long trade. And again, I think we're probably off to the races on gold to about 1,700 by the end of the year. But that's just my opinion. Do your own due diligence. Make sure you got stop losses in there because I have been wrong a lot, but I use stop losses. All right, that was number 4. We go to the podium time. Thank you, Mr. Tesla, again, not Nicholas Tesla. We're just going to call Elon Musk Mr. Tesla at this point. NASDAQ 100 was ripping today. You can see that beautiful green candle. Really just a pretty unbelievable run since October of last year. It's just phenomenal the way this NASDAQ has performed. Back in October, the NASDAQ 100 was down around 74.80. Right now, you're looking at 97. I mean, well, it's just a huge move up in a rather short period of time. Again, you've got your FANG stocks, or as we call them, what was it called? It was called the MAGA stocks. Yeah, nothing to do with Trump, but the MAGA stocks. I need to change the acronym. How about Gamma stocks? We don't have to call it MAGA, but GAMA. Looking very, very strong. Bringing this one up. Tesla, again, one of the major factors why we saw this move up today. I'll show you Tesla's chart here in a second. NASDAQ Composite closing at 97.32. NASDAQ 100, 97.32. NASDAQ Composite is at 98.17. So very quickly you can see the disconnection. Normally the Composite is overall higher than the NASDAQ 100, but because you have a couple of components that are just rocking to the upside, it would not surprise me in a few weeks or months to see the NASDAQ 100 actually priced higher than the NASDAQ Composite because of the bias weighting to some of these stocks like Apple, Tesla, Google, Amazon, etc. So it's really changing the dynamics of these indexes. Right now, it's only about 70 points away from the NASDAQ 100 crossing the Composite. But that was your third place, was the NASDAQ Composite. Number 2 brings us to the ZN Futures. That's the 10-year Treasury note. As you can see, nothing really exciting here happening with regards to price movement. You got a nice little red candle there, which means that yields moved up. Yes, they did, but not dramatically. It was up 0.9%. That basically brought it up to 1.57 for that 10-year yield, and that was your number 2 finisher. From a technical perspective, if you guys look at this pattern, this does look like a pennant formation. I know it's a little bit abstract, but as they say, technical analysis is an art form. Just kind of get the general sense that it's making some lower highs, and you're getting a sense of higher lows going across the bottom here as well. So this is really what some would call a pennant formation, which may give some optimism for those of you being bullish because it usually breaks statistically in the direction of the prevailing trend. All right, that was number 2. Number 1 brings us to crude oil, which we've been just bullish on for a few weeks now. Actually, about 2 weeks after I made that double bottom. Today was a great rip. I mean, we talked about this one, guys. We were really saying, look, we close above this 52 mark. We got the close above 52, and today you had a real nice move up. 2.9% to the north side for crude oil, bringing it to 53.56. All in all, a very nice day. This may be that point of inflection where crude oil stops its sell-off, which has been absolutely just vicious since the beginning of the year, really going to January 8th. An aggressive sell-off. Now we're recouping some of that, and it looks like it's just gaining a footing. My guess is you'll probably see a little bit of a pullback, retest that 52 mark, and then continue back to the upside there. So that's what we've got cooking, at least for crude oil. And that is your top 7 markets out there. Hopefully one of those puts some green into your pocket today. Okay, I have a whole bunch of questions. I'm going to see what I can get to that would appease us because I've got so many different ones. Michael, you asked about different cryptocurrencies and how to move them from Coinbase to a wallet to a paper wallet. I don't really have time on this show to go into the cryptocurrency side of how to create a paper wallet. There are a lot of paper wallet generators that you can find. My suggestion would be to download the paper wallet generator, use it on a computer that is not connected to the internet in any way, shape, or form and will never be connected to the internet, and then you can print your paper wallets from there so no one would ever see those the codes. How do you send from a wallet? Simple. Paper wallet has a little QC or QR code, whatever that little this cube is, all little dots, and you can send it directly to there. Just make sure that you back it up or put it in a very safe place because if you lose that paper, your cryptocurrency will be gone forever. Let's see. What else do I want to get to here? All right, this was interesting. Craig says, I've been holding CenturyLink since the $12 mark. Today's drop has me questioning if I should get out. Yeah, I think there's a lot more to it than just your today's move on CenturyLink. Let's bring up I think it's CTL, TJ. CTL would be the symbol for that one. CTL. Yes, CenturyLink. There you go. So bring this one up. You mentioned that you're in it since 12. I'm to be honest, not to be a jerk, I'm really kind of concerned at what your intestinal fortitude is on this one because we put a little line right there at $12. That's that blue line. If you said that you're in it from that point, this thing rallied all the way up to a high of $15.30. What was your target? What were you looking for? Because it's moved $3. I mean, you got yourself at least a 20% rate of return gain in what, a month? That's phenomenal, brother. I'd be head over heels to get that on a nice investment like this. 20% in a month, maybe a month and a half. You analyze that, you're looking at phenomenal rates of return. But then for whatever reason, you let it drop from $15.30 all the way back down to $12.45. So you have this huge winner, and then you're barely in the money. And now it's bouncing back and forth. What I notice most about this chart is how quickly and abruptly it's turning at supply and demand zones. This is really good here. Why did you hold it as it attacked this supply zone the first time? Why did you hold it when it attacked the supply zone the second time? I mean, these are great market timing opportunities. Right now, I would say probably hold it because you're at a pretty good demand zone, in my opinion. But what are you waiting for? You know, I think you should be a little bit more active here. I was just for Craig in Seattle, and sorry to sound so condescending and mean, but this is what we teach. I mean, this is all about market timing and saying, hey, don't get caught with these big market pullbacks and erase a lot of your gains. Even if you had put a trailing stop loss somewhere back in November, December would have stopped you out, and you'd probably been out, at 15, 14, somewhere in there, not riding this pinball game. Because, boy, I tell you, your ulcers, you might want to get those checked. This is a troublesome thing to be holding on to. It's been moving a lot. So what would you do? Right now, I would probably hold it, but I would put a stop loss. It would be right. My stop loss on this would be right about 12.80. If it got to 12.80, enjoy an 80-cent win. But make it a learning lesson. Study this one. Go back and check this and say, I am not going to do this again. I'm not going to let this happen again to my account. Let's time these markets. Let's get better rates of return as opposed to hanging on to things that are pinballing all over the place. All right, that will do it for this segment. When we come back, I will have Mr. Steve Moses on the phone. We're going to talk options out there today. If you'd like to know more about options, you can send in your questions. Of course, you can go to powertradingradio.com. You can click that little free class button to find out more about anything we talk about on today's show and find out about classes nearest you. So send your questions in at powertradingradio.com or join our social media channels, Power Trading Radio, as well as YouTube's, Online Trading Academy's YouTube channel. We'll be right back with Steve Moses after a short break.
What if you knew the income strategies professional investors used? The strategies designed to generate active income from the financial markets. After all, no one's going to care more about your money than you.
I learned that I can be in control of my 401k.
I used to work for money, now I have my money working for me.
With the right training and guidance, you can learn the skills to become a more confident investor and make your money work harder for you. Want to find out what's possible for you? You can, as long as you're willing to take the first step and call OTA today.
Call for your free tickets right now, and you'll also receive a free Professional Insiders kit loaded with lessons from some of our top instructors on topics like enhancing your retirement strategy, capital preservation, and income generation. The Professionals Insider Kit makes it so you can get started right now.
Call 888-304-8723 or visit us online at tradingacademy.com and schedule your free class today.
Click is something I wish I had when I started because it facilitates the learning process a lot quicker.
This is not about taking many trades, it's about taking the right trade.
It helps me save myself from myself. It's just a revolutionary educational tool. It just propels you through the learning curve.
The biggest shock for me is the level of innovation that happens within the company, and it's continuing.
It's just perfect in this new century of trading.
Everyone's on the same side, and I think that's what I love about it more than anything else. Helping each other, supporting each other, all with the same objective. Again, wonderful.
There's no mountain high enough that the leaders in this organization won't climb for their students. They'll just never give up.
It can only help. It can only make one a better trader.
Gives you one of the most valuable things we all have, and that's time.
Welcome back to Power Trading Radio Live with your host, Merlin Rothfeld, and today's special guest.
Hello, everybody. Welcome back to Power Trading Radio. It is your Wednesday edition. A quick shout out to everybody on our social media channels out there. Fink says, Merlin, you forgot about Larry's baby NVIDIA. Yes, NVIDIA was certainly a factor in today's move. Huge move up on earnings, looking very, very nice out there. And also, Don says, thanks for being a great source, Merlin. Absolutely. By the way, spread the word. The more the merrier. I always love when we get discussions going in our chat panels out there. So keep it going. We enjoy it. All right. Today's guest, I have no idea where he's at today, although I have a clue. I heard a little hint there from TJ when he was connecting him. We have Steve Moses joining us today. He's an options expert with Online Trading Academy. Steve, how you doing?
Good afternoon, Mr. Merlin. How are you, sir?
I'm wonderful. I have a simple question to start. Red or white?
Red.
Yes, man after my own heart. All right. It's the riddle that will keep our audience guessing for days. What were we talking about, folks? Red or white? What's new in your world? Where are you at? Anything new going on you want to share to start?
Well, today I'm kind of off this week, so I'm in Napa Valley, where I live and where I enjoy certain fermented beverages before I head back out on the road next week for some options classes.
All right, and we'll get the options classes here shortly. I got a bunch of questions that are coming in, so I'm going to just start off with some listener questions. Maybe that'll spur some discussion in our social media channels out there, and feel free to interact with us today.
Dude.
Huh? We're live, yeah.
Shoot.
All right. This one's from Brendan. He says, question for Steve. What delta do you prefer on your short leg when selling credit spreads? Oof, there's a specific question.
Well, okay. I could say what I prefer, but, you know, the world doesn't always do what I prefer. Assuming people know what a credit spread is, your short leg is your anchor unit. It's the option you're selling that the stock needs to stay over or under based on whether it's a bullish or bearish trade, which means the anchor unit, the option you're selling, is out of the money, which means it has a delta of less than 0.5, between 0.5 and 0. So if we have some new listeners, delta tells you how much the option premium will move for every dollar the stock moves. Deltas range from 0 to 1 or almost 0 to 1. Out of the money options have deltas between 0 and 0.5. So I'd love to get as close to 0 as possible. I mean, the lower the delta, the further out of the money the option is, the less probability that option will become in the money, thus the greater probability that those options will expire worthless.
Mm-hmm.
So, for example, if you're selling an option with a delta of 0.15, that means there's only an approximate 15% chance that that strike price will be touched before expiration. Well, if there's only a 15% chance it's going to get there, then there's an 85% chance it's not going to get there.
Right.
And those numbers aren't written in stone. So saith Moses, but those numbers aren't written in stone. But they're probabilities.
Right.
Delta can be used as a probability gauge, so to speak. I'd prefer my deltas to be as low as possible.
Sure. And let me just real quickly clarify, because I know some people are going to, wait a minute, you have something that's 85% chance of success. That's not what it's saying. And the options delta, basically you're looking at a probability based off of the current normal. Basically, if things stay the same, stay the way that they are, have been trending, etc., then yes, there's a 15% chance it will get down to this level. However, we know that there's outliers. There's days like today where all of a sudden things just don't seem to be following any specific direction. It just gets launched maybe by one or two specific securities for an index or an individual security itself. So don't take those as that is the absolute probability. It's a probability that's a summation of historical data. So I want to clarify that, because I know a lot of people going, well, if there's an 85% chance, I'm going to take that trade all day long. They can fail. So let's not grip onto that like it's the only thing ever.
I don't know if the planet will be spinning tomorrow. I don't know if I will be spinning tomorrow. I can't guarantee anything, and certainly in the financial market, there are no guarantees. All right, I can guarantee actually one thing: the Knicks will never win another championship. Other than that, I can't guarantee anything. And so we are talking like the casino. We're talking probabilities.
Right.
The house could lose on any hand, but the probability is they're going to win more than they lose. And that's what we're talking about when you sell options. You're dealing in probabilities. Of course, there are no guarantees.
Yeah. And as far as, it's a good question, Brendan, like which delta do you prefer? That's a matter of personal preference, right? I think you have to figure...
Well, it's kind of, yes, when I said personal preference, I could tell you what I would love the delta to be. But remember, every option trade that we look to enter is based on core strategy. That's the foundation of everything we do at OTA. So if we're going to find a demand zone, a directional trader is going to look at that demand zone and go, all right, when the stock, the future, the Forex gets down to demand, that demand zone is going to act as a springboard to propel it up, and that's your profitable trade, but it has to go up.
Right.
But with options, when it gets to the demand zone, we can sell out of the money options below the demand zone, or out of the money options above the supply zone, and the stock doesn't have to move in the expected direction. It just has to not go below that zone.
Mm-hmm.
And that's where, when we talk probabilities, it's why credit trades have a higher, and I will use this language, a higher probability of making a profit.
Right.
Not guarantees by any means, but think about it. If you're directional, it better go in your direction, and if it goes in the wrong direction, you lose money.
Right.
With options trades, when you're selling, it doesn't have to go in a certain direction. Nothing can happen. It just has to not go in the other direction. So you, by definition, have a higher probability of making a profit.
Right. And I think to put it into an analogy that everybody can understand with regards to high probability versus low probability, think of it as like a horse race, right? The horse that's the number one that everybody thinks is going to win is the high probability horse. And whatever the wager is that you make there, you don't make a lot of money. It's the long shot where you make the huge ones. But the odds of that long shot coming through the gate first or across the finish line first is just so far removed. There's a reason it's handicapped like that. So you have to understand that when we make trades, there are times where you see a trade that you go, man, I've run through the odds enhancers. I've looked at a supply zone. I've looked at the demand zones. I've mapped everything out. And it's giving me the feeling like, man, I feel like there's an 80% chance it's going to work out, but it might not have that much reward potential for you, whereas one that might have a lower probability of working could have much more reward. And those are the trade-offs we have to juggle every day as we look at investment opportunities or trading opportunities in the market.
Absolutely, and I'm sure on everybody's mind today in the last 2 weeks, 3 weeks has been Tesla.
Yeah.
And when we talk about probabilities, I was watching CNBC or one of these financial shows, and 2-3 weeks ago, I heard that some guy bought 800 strike call options when Tesla was in the upper 500s. I mean, talk about the long shot.
Yeah, right.
I mean, now if he sold those options, he could have made multiple seven figures from what I heard. This was not an OTA student. I just heard about it on TV. But that this person bought, hundreds and hundreds of options that were so far out of the money, the probability, was not in his favor. And even if the stock did move, if it didn't move by a certain deadline, he could have still been right directionally and run out of time and lost money.
Right.
Hopefully they took their profit because, after hitting 968 2 weeks ago, the stock tanked almost 300 points, and now it's back again.
It's back again.
So, we're dealing in probabilities.
Yeah. It's funny, there was a viewer out here. Let me just make sure I get the gentleman props where that one came through, because Trent says a few days ago you talked about Tesla back down around 500. I said it wouldn't surprise me to see it back down around 500. Do you still see that as a possibility? When and why? I definitely see it as a possibility. It's a stretch right now. I actually thought if we were going to see it go down to 500, it would have been immediately after that parabolic move. What's interesting now is you have so many major market maker institutional firms all coming out like a Ouija board saying, we think it's going to 1,200. What's interesting about those types of calls is it's almost a self-fulfilling prophecy at this point. It would not surprise me at all to see this thing keep on going up to 1,200, because now you have the institutions telling the retail investors, buy it, it's going to move up another $300 from this point. That's basically what they're saying when they say our target's $1,200. So you're going to get a lot more people buying this one. At some point, the fanfare, the hysteria that's jumping into Tesla, I think will subside a little bit, and it'll come down to a more realistic valuation. I think it's overvalued at this point, but that's just me and my take on it.
And I'll tell you something. I mean, I will say this. I have the confirmation slips to prove it. I've traded Tesla 3 or 4 times the last 3 weeks, but not directionally.
Right.
I did not make a directional bet. But, when we were talking about probabilities a minute ago, 2 weeks ago, I think it was February 4th, when Tesla shot up to 968. That was a Tuesday, Merlin. And on Tuesday, when the stock was around 950, I was able to go up 200 points to 1150 and sell options 200 points out of the money, expiring in 3 days.
Wow.
And collect $1. And I bought them back the next morning for 20 cents. I didn't even stay in that trade till Friday. But think about it.
Yeah.
Somebody was paying money when Tesla was at 950. Somebody was paying money to buy the stock 200 points higher in less than 3 days.
Yeah, now, it's insanity. But
I
that's
like
great.
to think they have a Red Sox hat on, but that's me.
Yeah.
But I was more than happy to sell it to them.
Yeah, it's interesting how hysterical. And I love that this is happening, actually. It's funny because everyone points the finger at Bitcoin and go, oh, it's pump and dump. Oh, God, Bitcoin's so garbage. It's just a scam. Well, if you look at some of the moves that we're seeing out here with Tesla, I mean, you could overlay those charts and have a very similar picture here. So it'll happen time and time again in the financial markets. It's just what it is. Let's see. I had where was this darn question? This is a pretty good one. It deals, where was it? I have to dig through my questions to find out. Okay. we're going to cut to a commercial break, but I'm going to read this question just so you have a chance to think about it for a second and plan, because I think options may be a great play for this. One of the things that freaks people out is that Black Swan event. I feel it is coming. I do think that there is a Black Swan event that's right around the corner. I think it's going to hit everybody blindside, and these markets are going to have a cratering effect. Marco De Silva says, I'm going to read through the second part. He says, I'm a small day trader and use TradeStation as my broker. What are the chances of TradeStation or any other broker going bankrupt? Your money is protected by SIPC insurance, so wouldn't worry about that. When that Black Swan event hits the market, what options do I have? I think that you could use options, but what we'd want to be doing is doing a much more aggressive play, and we'll talk with Steve Moses, who's our options expert on that one when we come back after a short break, about how to maybe just go so far out of the money on options. It's an unbelievable price. You think it's going to fall to that level? Crazy. Someone's going to basically give you those options. I think that might be an option. So let's take a peek at that question when we come back. Marco, Steve Moses is our guest today. If you guys have questions for Steve, send them on in at powertradingradio.com. Click the little button there that says Power Blast, or join our social media channels on YouTube, Power Trading Radio, or Online Trading Academy, and we'll be right back after a short break.
Learning this way is fine when the stakes are low. But when the stakes are high, you need to rely on skill, not just knowledge. At Online Trading Academy, you build your skill one step at a time. We teach our students to trade and invest with a strategy, not a hunch. You learn our methodology, then practice it. You get to make mistakes and ask questions, and watch instructors make live trades. Develop your skill the right way.
Meet Mac. As a trader, he liked the signals that came from technical analysis tools, but they didn't help him find the best trades consistently, so he searched for a new approach. Mac attended Online Trading Academy's free class and discovered their core strategy, a trading methodology that spots when big banks are likely buying and selling, so everyday investors can too. Mac carved out a path to trade and invest with confidence, and so can you.
Call 888-304-8723 or visit us online at tradingacademy.com and schedule your free class today. You're listening to Power Trading Radio live. Watch the show live or on the archive at powertradingradio.com and YouTube, or download the podcast from iTunes or wherever fine podcasts are downloaded.
Hello, everybody. Welcome back to Power Trading Radio. It is your Wednesday edition. We've got Steve Moses joining us today, who is taking the day off in Napa Valley. And just for our viewers out there, Don on Online Trading Academy's YouTube channel, you were correct on the red versus white discussion. I'll just leave that one hanging out there. But Don, you were right. Steve, before the break, I kind of read a question from Marco De Silva who came in, and it should be a concern for everybody. Right now I'm reading all these headlines saying, hey, 401k, we've got more 401k millionaires than ever before, and everyone's just enjoying massive, massive paper gains at this point. Generally, when we have these unbelievable parabolic moves, there comes an event or something comes along that all of a sudden erases a good chunk of it. The Black Swan event, as many like to call it. I just like to call it a major market crash. There's many reasons or justifications we could make for that happening. More importantly, let's just think of a simple way to use options. And I kind of threw out a suggestion earlier, and I just would like to get your thoughts on it. Let's say that I had a 401k or just a regular investment account, and I wanted to protect that from the Black Swan event, not from the market a correction of, let's say, 10 or 15%, but from the Black Swan event. Something that happens so sharp, so fast, you're looking at 10, 20, 30% over a couple of days. Would it make sense to, buy put? Let's say SPY right now. TJ's got the chart up here. SPY currently trading right around, let's call it 338. Brendan, you said 200s, but what about going out and buying, a year out option or buying puts a year out at, let's say, 250? I mean, it seems ridiculous to think that this market would fall to 250 from here, from 338. So, in all likeliness, you're probably going to get those for very, very, very cheap. But if there's a Black Swan event, those will inflate in value in a very, very short period of time. Would that be a crazy strategy?
Well, okay, first of all, 338, what's 50% of that? Because, we did have 12 years ago 50% in 18 months.
Sure. Yep.
You're right. That would be, I'm not going to sit here and say that's never going to happen again. Look, I'm a good American. I hope it never happens again. I mean, patriotic guy. But I'll tell you something, if it is going to happen, there is, either lots of money to be made or lots of money to not be lost, which is the gist of this question. So think about car insurance that we all have. and we have what's called a deductible. And what you're talking about, this black swan event, you don't want to be buying. You want to be careful when you buy insurance because, first of all, when is the best time to buy insurance? Now, most people would say before you need it, which is not, a bad answer.
Right, yeah.
But the best time to really buy insurance is not just before you need it. It's before the insurance company knows you need it. Because once the insurance company knows you need it, what's going to happen to the premiums? They're going to go up because the risk to the counterparties is now, everybody knows. Once the hurricane is coming and the winds start blowing, that's when your homeowner's premium goes up.
Yep.
Once you something else. So if you think if you want to protect yourself, not just against a small 10% drop or a 15% drop, because in the grand scheme of things over the last 10, 11 years, we've had a handful of 10, 15, even a 20% drop a year and a half ago. And there's no fear in the marketplace. Everything bounces back. So you could go out 6 months, 9 months, a year, and go down, knock 40% off, buy 200 calls a year. And I haven't looked at an option chain.
Right.
I don't know what the premiums are. But conceptually, if you really have reason to think that of course, if you had done this 2, 3, 4, 5 years ago, you lost the insurance, but that's okay.
Right.
Because whenever you buy insurance, do you ever really hope to file a claim?
Yeah.
No.
Right.
I ask students every class, anybody upset their life insurance policy didn't kick in last year? You don't sit there and go, right?
Yeah, right.
You don't sit there and go, gee, my car insurance expires Friday night. I better hurry up and get into an accident. So, go out a far enough period of time, far enough when they say, like you said, your black swan event. If the market really tanks, and this option doesn't even have to become in the money.
Right.
If you go out of the money 30, 40, 45%, and the market really starts tanking, not only will the put premiums pay off or increase intrinsically as the market starts going in the southward direction, while the market is going down, the volatility, the implied volatility of the options is going to inflate as it is increasing intrinsically.
Right.
So it's like walking up the up escalator. You're making money two ways. So the market going down will increase intrinsically those premiums, and while they're increasing mathematically, intrinsically, they will be inflating at the same time.
So yes, it could potentially be done. It certainly needs to have some a little bit more thought process to it, because the question becomes, what strike price do you buy? But going back to Marco's question, that's to me probably one of the best ways to capitalize on a black swan event. The challenge of a black swan event is you just don't know when it's going to happen. That's the whole point of it. But the longer we continue this run, which just now it's actually extending even faster. I mean, this monthly chart here that TJ pulled up of SPY really tells the story. We actually had a shooting star formation on the daily on SPY, which to me says we're going down. That was for the month of January. And all of a sudden, February? Hold your horses, everybody. I mean, it's ripping right now at levels we haven't seen in years. So, when you start to get that the masses jumping on and piling in and nothing seems to phase the market, to me, that's when the black swan events come along, but we'll have to wait and see. Last question. This is from Caitlin. She sends in a question for us. She says, in what situations would you prefer to do premium stops versus stops based on the strike price being crossed? Or do you?
When she says premium stops, you mean losing a certain amount on the option?
I'm assuming
okay, that depends on whether you are trading directionally or non-directionally. If you're buying options, so let's just say you're buying a call at demand, you're going to that's a bullish trade. You're buying a call at demand, that's a bullish trade. So the first question is, when do you not want to be in a bullish trade? Answer, when you is no longer bullish.
Right, when it crosses
Pretty
that
simple
demand
concept.
zone,
When it breaks the distal line of the demand zone by, whatever percentage of the daily ATR you're using, when it breaks the distal line of the demand zone, you is no longer bullish, pull the Band-Aid, close the trade. Now, but here's the thing. You have to have an addendum to your trade plan, because what if you get into a call option at demand and the stock doesn't go down, it doesn't stop you out, but it doesn't go up? Now you are losing premium. Now you are losing option premium, even though you've never gotten stopped out. So in that case, you might have to say, well, if I'm going to use a 3-to-1 reward to risk, and I bought an option for $5, and I'm hoping to sell it for, I don't know, 8, which means I'm going to sell it for 4, risking 1 to make 3, you could lose that dollar to time decay on the option premium, even though you were never stopped out intrinsically on the stock breaking the demand zone and the opposite, of its supply. Does that make sense?
It does. To be honest, it's a little over my head because I'm not the options guy, and it's funny. I was just thinking, like, you're going almost XLT on us. It was good stuff right there, bud. Unfortunately, I'm not your options guy. I will say for many of you that don't know options, and I actually do know options. I'm just not an expert at them. That type of discussion is something that happens in the XLT, the mastermind, the clubhouse sessions, which go on regularly. Steve, are you doing clubhouse sessions, mastermind stuff?
Yeah, usually when I'm not traveling, Monday afternoon at 4 Pacific I'm in the spotlight. Tuesday afternoons at 4 I'm in the clubhouse, and 3-4 times a month I have XLTs spread out. Matter of fact, I'll have one tomorrow morning, 9:30 Pacific time, 12:30 New York time, while the market's open tomorrow on Thursday. In addition to actual classes.
Nice. Well, if you guys would like to participate in actually, hold on. I'm not even going to do the wrap-up yet. Your upcoming classes, where are you going to be? You said you're going to be on the road here soon, so.
I think the sports gods are testing me because my favorite teams, sarcasm included, I will be in Dallas next week with Cowboy fans. In March, I will be in Philly with Eagle fans and in Boston with Red Sox fans.
Oh, who did you upset?
I must have ticked somebody off.
Oh,
Actually,
man.
those are some of my favorite centers, and I love going. I'm back in Dallas again. Those guys are great down there. Boston, Philly, Bruce, and those guys in Philly. First time in Chicago, though. First options class in Chicago, and I can't wait. First time I'll be there. So got a fun couple of months coming up.
Well, bring your jacket. Wayne Citron was on the program yesterday telling us that snow is not cold in Chicago. I beg to differ. Steve, thanks so much for joining us today. I hope you enjoyed the Reds. For those that were following along, yes, red or white wine was the topic that we were going at there. Steve's a red wine fan, as am I. For some reason, white wine just doesn't do it for me. Tomorrow morning at 9:30 Pacific time, he'll be doing an XLT session. Steve Moses will be doing an XLT session. I would encourage you to join that one. He's got a whole bunch of other Mastermind Clubhouse sessions. So for those of you who are Online Trading Academy members, go to MyOTA, check that calendar so you can join Steve. And also, if you're in Dallas, Philly, Boston, or Chicago, take a class with Steve Moses as well. Now, to find out more information, you can click that link. It's social media, or not social media. It's on our PowerTradingRadio.com webpage. You see 2 little things that say free class. Click it, type in your zip code, find out which campus is closest to you. Steve, thank you so much. I appreciate you taking the time out of your busy schedule. Enjoy the rest of your day off. I'm sure it's beautiful up there in my home stomping grounds of NorCal, and thank you very much. We'll see you soon.
There you go. Thank you, Merlin. By the way, one last thing to add. Now that I'm here in Napa, don't drink and trade.
No.
That's never a good idea.
Bad idea. Reaction time's
Right,
just
bye-bye.
a little bit slow. All right, take care.
There you go.
All right, as I mentioned, there's 48 physical brick-and-mortar schools around the world. Each one has free classes, paid classes, community events, and much, much more, all with the intent of helping you understand how these markets truly work. Not how the major financial institutions want you to think that these markets work and listen to their advice about where they're pontificating the stock may go, but the actual how to study it, analyze it, place, manage trades, and really keep on top of a trading plan. Again, if you want to know more, click that link showing up at PowerTradingRadio.com. Might even show up on your social media channel right now. Joanna's still on vacation for her wedding, so you might be back next week. So I was going to cut to a commercial break. I'm not going to do that right now. I'm going to continue and go straight through because I got some more shooting to do here in the studio. I've got a bunch of videos coming out that we got to get ready today for you guys. All right. Thursday, February 20th, brings us the Philly Fed Manufacturing Index. I didn't mention this one yesterday, but the Empire State Manufacturing Index came out much better than expected. It was at 4. It came out at 14, so that's nice. It's still not very healthy, but it does show some expansion. We'll see if the Philly Fed Manufacturing Index tomorrow follows suit. You also have unemployment claims, natural gas storage, and crude oil inventories. Crude oil will probably be of importance because you see how much crude oil has been moving and the important points it has just crossed with regards to these indexes. Now, you look at the euro, you have the ECB monetary policy meeting accounts, you have British pound with retail sales, the Aussies with flash manufacturing PMI and services PMI, and finally for Japan, you have the core CPI numbers. Now, moving on to your earnings calendar, yes, there's still stuff reporting earnings, not the best, and of course there's some ticker symbols in here. I don't have the slightest idea who they are or what they are, but you got Eversource Energy, Hormel Foods. Yes, if you can't make chili, you buy Hormel Foods. Ventax, Teleflex, Energy Incorporated, Banco Colombia, I don't know, I think that's Southern, I don't remember AEP. You've got Newmont, Edison, Hewlett-Packard, Viacom Cable, and DPZ, I believe, is Domino's Pizza reporting earnings tomorrow. Now, I don't know what is happening with our guest for tomorrow. I have a roadblock, or a trains colliding, I guess we should say. I have on here Mark Greco talking about trading platforms because there's a bunch of questions about Click. I'm going to try to have Mark Greco on the program, but he's been so busy with the developers, I'm not sure if he'll be on set. If not, I'll have Larry Jacobson on the show to gloat about NVIDIA, which is just soaring. What's interesting about NVIDIA, though, trading at $317, you'll recall going back 2 years when he was talking about this thing at $38 and adding it to his portfolio. Yes, he's on record at $38 saying buy, and he said, based off my analysis, my target is 350. Well, we're almost at 350 on NVIDIA, so I'm curious to see what he would do if it actually got to that level. We'll have to find out. So tomorrow is going to be one or the other. We might even get both Mark Greco and Larry Jacobson on the show. Let us know what you guys want to see out there. If you enjoyed today's show, you got some good information. If you're overwhelmed with some of the options talk, click that little thumbs up button that you're seeing on our YouTube pages out there. Of course, you can always leave comments and questions down below the YouTube videos. Or go to powertradingradio.com, click that Power Blast button, leave us questions that we can get ready for the next show, or feedback or anything at all. And if you would like to learn more about Online Trading Academy or our courses and how we can help you understand how to put these markets to use for you, not for your financial advisors or your firms, click that link at powertradingradio.com that says free class. Type in your zip code. They'll tell you which of our 48 campuses are nearest to you. Until then, happy trading, everybody. We'll see you tomorrow. Take care.
You're listening to Power Trading Radio live. Watch the show live or on the archive at powertradingradio.com and YouTube. Or download the podcast from iTunes or wherever fine podcasts are downloaded.